Hey, Dan Passarelli here. I've thought this for a long time when it comes to the stock market. It's weird how the stock market processes information. And today, to me, is a perfect example of it. So today, the Trump administration announced that they have a deal with Vietnam. And that pushed the market up about 0.4% on the day, closing near or at the high of the day and another all-time high. And it's because there's a deal with Vietnam. But if you look at the deal, they agreed on some tariff things, but all the details, well, we're going to hammer those out later. Now, to me, that's kind of a weird thing because I know how deals work. I mean, remember Brexit? Brexit was the EU said, oh yeah, we're going to leave the European Union. And then they had this hard border issue with Northern Ireland. And it took them years to work out this one tiny little minor, seemingly kind of inconsequential issue. I guess it's not inconsequential because it took them years to work on it. But gosh, one little detail. But nonetheless, today the market loved that there was a deal, even though we don't really know what it is. Now, this exact thing played out with the deal with the UK. And some of that deal, I guess, got hammered out a little bit since then, but there's still a whole bunch that still needs to be hammered out. So if it happens once, it's a thing. If it happens twice, well, it's the start of a pattern at least, right? So as traders, all we really need to know is what's the pattern, right? Pattern recognition makes for a really, really good skill for traders. So they announce there's a deal, market goes up. Doesn't matter what's in the deal. Maybe not, because it'll get hammered out later. So that's where we are. And I find that to be, and I'm not being facetious here at all. What I am doing is talking about how do we trade these things going forward? Because when there's another deal that's announced, even if there's no details to it, that is likely to send the market higher. Now let's think about this for the longer term. For the shorter term, got a deal, market up, right? For the longer term, I don't know if it's really going to work out quite that way. Because the reason why the market rallies is because, well, obviously because more people buy stocks, which should be based on how much the companies are making, right? That's why we look at PE ratios and price to book ratios and, operating margin yields and that kind of thing. So when a deal's announced, the assumption must be that companies will make more money as a result of these deals. When the details actually come out later, that's when we should have a better idea of exactly which companies might make more or less, how that would affect their earnings. And so I suspect that though in the short term, we already see what the pattern recognition scenario is, in the longer term, things are going to play out probably differently. Some stocks might send them up even higher because it might be a big boon for them. Some stocks might have been some irrational exuberance and those stocks rallied too much as a result of non-detailed deal. I hope that helps. This is Dan Passarelli, Trade Smart.